Alright, so let's take a look at GameStop. Here's the stock chart. Let's see, how has the year been going for GameStop? Looks like it's been pretty much dead money, right? There's a couple of, let's see, it started the year at 39 or 38, 37, so maybe not dead money. It's been a rough year. But if you look back, let's see, 2 years ago, before this crazy run-up, it was at $4. So it's a crazy chart, isn't it? Isn't it? Went back down to $10. Went back up. Went back down. 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 That's 1, 2, 3, 4, 5, 6 big runs. Was this the... That didn't count. Meme stock mania started right here, right? This was like the day of meme stock mania. Am I wrong? This must be it. So that's the I don't know, it looks like it's kind of like the central tendency. I guess it's taking it on the chin a little bit. Anyway, let's go see GameStop investor relations. This is the fiscal Q2, so they did report that. Let's see. Sales are pretty weak. I expected them to grow. They shrank a little. Not good. It came in at 1136 versus 1183. So, in case you guys can't see that, 1136 is a -4 instead of a +5. Oof. Tough quarter. Obviously, the summer quarters are a little less important than the holiday quarters, where their collectible sales were a little better than I thought. So the core game sales were less. We'll have to look at how they did on hardware and software and all that stuff. But obviously their NFT thing has probably not been working. Margins were, let's see how margins did. Gross margin, 25%, pretty good. But same quarter last year was 27, so I don't know if what the mix is supposed to be. Still a money loser, sort of to be expected in the summer quarter, right? This should be interest income. Oh, whatever. They did a split, 4 for 1. Everybody thought they would squeeze on the split or something like that, right? And people get crazy about these stocks. It's just a stock. You know, you don't have to get too wild and emotional about it. Some people get very emotional. I find you do better when you don't get so emotional. Good morning, good morning, good morning, good morning. Seme, Tuni. When you make a forecast, got a good question here from Sheldon. Do you expect your forecast to be accurate by that earnings call or after that forecast's earnings call? That sounds like, I'm not sure what the difference between those two things are, but what I'd say is that I don't expect it necessarily to be accurate. You know, it's very hard to determine what's going to happen and what's not going to happen. You know, forecasting is really difficult, obviously. I'd rather, for me, it's more about like bracketing, sort of bracketing the possibilities. So it depends. Sometimes I'm going for accuracy. Sometimes I'm going for like a worst case kind of kitchen sink. It all depends. Did I have interactions with SBF? Not really. Very brief, if I may say so. What happened with your Twitter? I'm usually banned off Twitter. I've been banned for a long time. Thoughts on Bankman? Greedy psychopath, I guess. Also kind of like a rookie. Really short, really kind of inexperienced. The guy only had a year or two in hedge funds. It's not like he was like some big shot, you know. Well, I thought, you know, that's kind of why I was so mad at Destiny, is I thought we were friends. But, you know, I don't think he has real friends. Don't your eyes get tired? Yeah, sure they do. We can look at Activision later, but I'm focused on GME right now. I heard Grindr went public, yeah. Who's BSF? Isn't that SBF? Alright, so let's see. Cash flow, pretty much exactly the same as net income, for what I can see here. And I don't have any specific agenda. I say that a lot. I just like making money, so I don't really care what the stock is, as long as I can make money on it. That's what I focus on. And sometimes you can make money buying a stock, sometimes you can make money shorting a stock. Sometimes the best thing to do, usually the best thing to do, is neither. You should only really be making investments or trades in rare occasions. Now, if you do a lot of an analysis, you can actually still be only rarely trading while looking at a lot of stuff. I hope that makes sense. All right. Proceeds from issuance of common stock, settlement of stock-based awards. Okay. Cash flow from, okay. Okay, perfect, done. All right, so trailing 12 months cash flow for GameStop is negative 800 million, so lost about 800 million. Not a big deal if we're going to see a real turnaround, but still waiting on a turnaround. It's not been great, as you can see from the revenue performance. Although, given COVID, it's just something to think about. All right, let's get the hardware numbers. So let's see, 596.4 for hardware, 316.4 for software, and 223.2 for collectibles. So hardware was about in line from last year. Software was down quite a bit. Collectibles was up quite a bit. Gap. Looks like Gap, SG&A and Gap, or non-Gap, adjusted whatever, costs and income are about the same. Okay. So pretty straightforward second quarter results there. So nothing really new from GameStop, it looks like. Listen to the call as well really quickly, see if there's any data in the 10Q we need to look at. It looks like the immutable X relationship is pretty much a zero. We do have the US data. Let's see, US, Canada, Australia, and then Europe. 166.4. Bet that we'll close one of these at some point. And then last year. Ooh, Australia down meaningfully. And Europe down meaningfully. America is basically flat. I think that's a good sign, to be honest. Although they had operating loss in the US, the only business to be profitable was actually Australia. Go figure. Okay, what else? May 22, we launched a beta version of a non-custodial digital asset wallet. July 22, launched a beta version of our peer-to-peer NFT marketplace. I was checking that out earlier. I'll be checking that out in a minute. Show you guys what the heck they're trying to do there. Let's see the number of stores or locations. I forget where they put that in here. It should be in here somewhere. Any of you guys see it, let me know. You say SHC? So Terra finally went up. Nice. Oh, they have Game Informer? I didn't know that. I don't see number of locations. It's sometimes in the press release, at the bottom of the press release, so I think I have to look there. But that's fine. All right, so that's it for the 10Q. Diana Sadejajej. Okay. And CEO is Matt Furlong. I need the exact store number. Ideally also the number of US stores, but let's take a look at the earnings release one more time. Sometimes it's in the bottom with the company description. No. That's over here, isn't it? About GameStop, right? I would like to know exact numbers. I wonder if they stopped disclosing that or what's going on. That seems weird. Well, maybe it's on the call. Let's listen to the call.
Good afternoon and welcome to the GameStop second quarter 2022 earnings conference call. Please note that certain statements made during the call constitute forward-looking statements made pursuant to the Safe Harbor provisions of the Private Securities Litigation Act of 1995, as amended. Such forward-looking statements are subject to both known and unknown risks and uncertainties that could cause actual results to differ materially from such statements. These risks and uncertainties are described in the company's earnings press release and its filings with the SEC. The forward-looking statements today are made as of the date of this call, and the company does not undertake any obligation to update the forward-looking statements. I will now turn the call over to GameStop CEO, Matt Furlong.
Thank you, and good afternoon, everyone. I want to begin by reiterating the deep appreciation we have for our stockholders' unrivaled enthusiasm, passion, and support. As we work to transform GameStop, these remain unique tailwinds for us, ones we always recognize and value. I also want to take this opportunity to thank everyone across the organization for bringing continued focus and intensity to our mission, particularly during an active Q2 that represented a transitional quarter for us. Before covering the quarter's specific initiatives and results, I want to provide a high-level update on where we've been and where we're looking to go as our transformation progresses. When our board began turning over early last year, GameStop was saddled with significant debt, decaying systems, limited employee depth, and a host of other issues. This is why we spent the second half of 2021 and the first half of 2022 making up for years of underinvestment in modernizing the business. The upshot is we now have a more diversified product catalog, strengthened fulfillment network, improved tech stack and e-commerce presence, and fortified corporate infrastructure.
I'm doing investment research.
Thanks to these improvements, including our SAP implementation, we're able to start focusing on a new set of priorities that include achieving profitability, launching proprietary products, leveraging our brand in new ways, and investing further in our stores. During Q2, we took steps to support each of these new priorities. With respect to pursuing profitability in the coming quarters, we right-sized corporate expenditures and headcount following a period in which the company had hired more than 600 new individuals. These actions, combined with the elimination of one-time expenses in Q1, contributed to a 14.3% reduction in SG&A. We've done this while improving our e-commerce experience and reducing free shipping to customers to 1 to 3 days. We're going to retain a strong focus on cost containment and continue promoting an ownership mentality across the organization. On the product front, our enhanced tech capabilities allowed us to follow the launch of our digital wallet with the launch of our new marketplace that allows gamers, creators, collectors, and others to buy, sell, and trade NFTs. The launch of our NFT marketplace supports GameStop's pursuit of long-term growth in the cryptocurrency, NFT, and Web3 gaming verticals, all of which we expect to be increasingly relevant to the collectors and gamers of the future. When it comes to accretive partnerships, we've been actively exploring opportunities to strengthen GameStop's offerings and increase brand visibility. We're building on the momentum established by our previously disclosed partnerships with organizations like Immutable and Loopring, whether it be through new relationships that support our commerce business, blockchain group, or both. The deal we just announced with FTX is a byproduct of our commerce and blockchain teams working together to establish something unique in the retail world. Lastly, when it comes to investing in our stores, we rolled out an improved compensation model for U.S. store leaders.
You guys heard
Each
it.
of these store leaders is being given a time-based equity grant of $21,000 that vests over 3 years, as well as the opportunity to earn additional compensation every quarter via a performance-based equity grant. In conjunction, we're raising hourly pay for certain store associates. These steps were taken to help us enhance retention and recruitment
So unlucky,
of
right?
passionate, quality talent. When we think about the GameStop of the future, we expect our stores to help us maintain direct connectivity to customers and sustain localized order fulfillment capabilities across more geographies. This is why, even as we continue evolving our e-commerce and digital asset offerings, stores will remain a critical piece of the company's value proposition. Taken together, we believe the aforementioned steps can help us attain profitability in the coming quarters and produce additional revenue growth over the long term. Let me now turn to our financial results for Q2. Net sales were $1.136 billion for the quarter, compared to $1.183 billion in the prior year's second quarter. Sales attributable to new and expanded brand relationships remained strong. It is also worth noting that sales attributable to collectibles, which is a segment we intend to grow over the long term, were $223.2 million for the quarter, compared to $177.2 million in the prior year's second quarter. SG&A was $387.5 million, or 34.1% of sales, compared to $378.9 million, or 32% of sales, in last year's second quarter. As noted, we had a strong reduction in SG&A on a sequential basis versus Q1 of this year, and we're taking further steps to reduce SG&A on a go-forward basis. We reported a net loss of $108.7 million, or 36 cents per diluted share, compared to a net loss of $61.6 million, or loss per diluted share 21 cents in the prior year's second quarter. There were no major one-time transformation, transaction, or related costs during the period. Turning to the balance sheet, we ended the quarter with cash and cash equivalents of $908.9 million. We continue to maintain a sizable cash position, even while investing in inventory to sustain strong in-stock levels and mitigate the full impact of lingering supply chain issues. At the close of the second quarter, we had no borrowings under our ABL facility and no debt other than a low-interest, unsecured term loan associated with the French government's response to COVID-19. Total liabilities compared to the second quarter of last year were down $237.8 million. Capital expenditures for the quarter were $20.5 million, up $7 million from last year's second quarter, reflecting investments in our technology and enterprise systems. We anticipate CapEx will remain at modest levels. In the second quarter, cash flow from operations was an outflow of $103.4 million, compared to an outflow of $11.5 million during the same period last year. Inventory was $734.8 million at the close of the quarter, compared to $596.4 million at the close of the prior year's second quarter. In terms of an outlook, we're not providing formal guidance at this time. It is worth noting, however, that our ongoing engagement with key suppliers is positioning us to receive stronger supply of next-generation consoles in the months ahead. I want to finish by reinforcing that we're working to accomplish something unprecedented in our industry. Transform a legacy brick-and-mortar retailer into a technology-led organization that meets customers' needs through stores, e-commerce products, and both digital marketplaces and new online communities. Our path to becoming a more diversified and tech-centric business is one that obviously carries risk and will take time. This said, we believe GameStop is a much stronger business than it was 18 months ago. I'll leave it there for this quarter. We look forward to driving more progress in Q3. Thank you.
This concludes today's conference. You may disconnect your lines at this time. Thank you for your participation.
No Q&A? You gotta be kidding. That's it?
Do you look up at the
These games look shitty. This one looked interesting, actually. I'd like to play this one. Bitverse. I have a lot of connectivity issues, I guess. I don't know why. Congregate account? I don't want a congregate account. Why you should buy. Stamp your identity across all the Bitverse games. Okay. I know Gods Unchained is the game people like a little bit better, but even there, I don't mind this Bitverse thing. This is kind of neat to me. I don't know why. Gods Unchained cards for $1 or a cent, I should say. This is sort of like Magic the Gathering. Pays to play. Gotta register to receive free card packs. You can download this and see if a lot of people play this or not. That's the big question. Volume in the last 24 hours is 500,000. That's not bad. All-time volume, $100 million. Pretty good. High sale, $76,000 card, 160,000 card owners, 30 million items. Let's look at price, high to low. These guys are trying to sell cards for a lot. It does deal X plus 2 damage. Wow, where X is the number of structures you control. Oh my. Oh my. That is a good card. How about this guy? I like that. That's me. Light's Bidding. Roar. Transform a creature with strength 2 or less into a 2/2 acolyte. Gain control of the acolyte. Okay, how about this guy? Aegis Commander. That's my wifey. Frontline. Roar. Delve a creature with frontline and put it into your hand. Okay. Servant of Inti. Give a friendly Amazon protected. Do you want to pay $350,000 for that card? Not bad, right? Hierophant Solenis. That's Jack Dorsey right there, I believe. Can you guys see that? I believe that's Jack Dorsey. Roar. Your other creatures gain. Whenever this creature damages an opponent's god, copy a random card in your opponent's deck and add it to your hand. Interesting. Okay, so yeah, Gods Unchained. I don't know. Are people talking about this on Twitter? Gods Unchained. 100,000 followers. That's not too many. Oh, and this is by Immutable X, isn't it? Ah, not in it. Well, they didn't break out what their, he hasn't tweeted in a week. Surprising, Sam. Yeah, so not a lot going on at GameStop that's new. Oof, bad timing. GameStop will be FTX's preferred retail partner in the United States. Oof. Yeah. Yeah, I don't think there's much going on with what's the immutable X coin or token? IMX. What's the market cap of this bad boy? Well, it was $7 or $8. Now it's 40 cents. It's kind of typical of all crypto right now. Market cap 274 million. So even if GameStop owned every single immutable X token, which may not be a bad idea for them, honestly, that could be what makes sense, is them to buy immutable X. You still would not really make a dent in GameStop's market cap. So that's just in terms of current value. I don't think Immutable X has any other resources or anything, but all right, I'm just gonna adjust some numbers here. There's 304 million shares outstanding now, so that's 9,122. Cash has changed a little as well. They have less cash than before, not a meaningfully different amount. 908.9. Okay. Yeah, the rest of my forecasts are kind of the same. Still have a $40 price target. What's the price right now? 25. After the split, discount rate has to go up, unfortunately. We have a different federal rate regime, so just bumping that to 8% gives you roughly fairly valued stock. Nothing special there. Let's look at my assumptions. I have revenue growing 5% from here on out, and 10% for a couple of years. That's pretty ambitious given last quarter they declined 4%. I was expecting growth, but I'm assuming the turnaround will hit any time. So even if the turnaround happens, that's kind of priced into the stock. So that's why it's probably not a great stock to be involved in. Because the turnaround, now if the turnaround's better than 5% revenue growth a year, then sure, there'll be upside, more upside to the stock. But at the moment, if it's just 5% revenue growth, any basic financial calculation will tell you that it's kind of what's embedded, the embedded expectation. So have the company going from $6 billion in revenue at the moment to closer to $10 billion in revenue over the next decade, to the end of the decade, So basically a pretty good turnaround where they kind of get back to where they were last decade. And in such a case, they, the stock price isn't that good. If interest rates come back down, then maybe it's a little bit better situated. But obviously interest rates would impact on revenue as well. So there's a couple ways to look at that. But it doesn't seem too exciting. I mean, those are the long-term embedded expectations where you're trying to gauge whether or not the market is panicking or not. I think the bigger question is, can they actually pull off a turnaround? How do they just sort of like be able to extract more value out of this business they have, which sort of seems like they're not well positioned at all. Let's see.